Shares of Disney have been all over the place recently, but the company got some good news on Thursday after the company announced for fiscal fourth quarter 2024 results. So we know what the full fiscal year looks like. $2.72 in earnings for the full year. So that was a little bit better than expectations. The direct-to-consumer business, meaning the streaming business, is starting to improve extremely quickly. Linear, still struggling. Parks had a little bit of weakness in the quarter. Some of that was related to the Olympics. I think that was an interesting takeaway from the conference call. But I want to get to guidance and what the company is expecting over the next few years, because the reason to be bullish on Disney is not just what the company is today, it's what's coming in the near future. Next month, December 4th, they're going to launch an ESPN tile on the Disney Plus app. They added Hulu. So now you're going to have all three of their main streaming services in one app. And next fall, early next fall, they said, they're going to be adding ESPN and the direct-to-consumer over-the-top package, which is going to include everything that ESPN is today and more. We don't know exactly what that looks like, but they have a ton of sports rights, and all of that is going to be available on that app. That's really the point. I think we're going to see a huge inflection point in the business. So I want to get through exactly what management said and what they're guiding. That's where I'm going to start. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's start with that guidance. And like I said, the baseline for most of these numbers is this number right here, $2.72. So they said for fiscal 2025, that's the current fiscal year that they're in, they're expecting high single-digit adjusted earnings per share growth, $15 billion in cash from operations, $8 billion in CapEx, and then $3 billion in stock repurchases. So these numbers look pretty good. Disney has a market cap of about $183 billion as I'm recording. So a buyback like that isn't a huge deal, but solid earnings per share growth. But what really caught my eye is they are giving fiscal 2026 and fiscal 2027 guidance. Companies don't just do this, especially a company that's as conservative as Disney. They're expecting double-digit adjusted earnings per share growth in 2026 and double-digit growth in 2027. So let's just say that there's 10% growth for each of the next 3 fiscal years, end of fiscal 2027. That would be $3.62 per share in earnings. I think based on what management said on the conference call, that's probably pretty conservative, but that would mean that shares are trading about 30 times 2027 earnings. Seems a little bit expensive, but I think it's worth going over exactly the reason that I am bullish on where Disney is today. And where this starts is with streaming. The linear business, I think that is very clearly in decline. Maybe it's going to be positive cash flow, but the future is really in streaming. And to put this into perspective, let's start here. These blue columns is the linear networks. Look at how much revenue they're generating in the linear networks, $2.5 billion in revenue. Streaming is already more than double that, $5.8 billion in the most recent quarter. Now the margins aren't as good, but that will come in time. But the revenue opportunity, when you're going direct to consumer, you don't have that same middleman with the cable companies as you used to. This is a potentially much, much bigger business than the linear TV business ever was. Operating income, this is where we're going to see improvement on this operating income line. I'll show some of that progress, but this is where I think there's huge upside when you look out 3, 4, 5 years. So let's start with the core business. Disney is actually spinning off or merged their non-core, their Hotstar business. I'll cover that in just a second, but that deal should be closed now. So subscribers for domestic Disney Plus up about 1.2 million to 56 million. International growth is a little bit more, 63.5 to 66.7 million. Revenue increasing internationally, but down a little bit. Domestically, they're starting to do more bundles, and that's why they're giving a little bit on price to try to get more subscribers in the ecosystem. But in total, you have 112.6 million subscribers for Disney Plus Core. That's a huge number. That is bigger than any of the other competing streaming services except for Netflix. But that's not the only part of the story. You also have to include Hulu. Hulu's growing slowly, but it is still growing. And their video on-demand revenue, $12.54 per subscriber. They're actually making a lot more on advertising. This is one of the reasons I think we can be bullish about the future of ESPN is the advertising infrastructure is largely built because of Hulu, not because of Disney Plus, but this is something that Netflix is trying to get into. Amazon has turned on advertising for their business, but Disney actually has a pretty good position in advertising because of Hulu. Sports is the other segment, and this is kind of steady. This includes not only the streaming service, but also ESPN. So you can see that operating income down a little bit, but this is going to be a relatively steady business. So why is there momentum here? There's two pieces. There is Disney figuring out its own content strategy. Over the last couple of years, Disney has really been reliant on the content that was started in 2020, 2021. There's a lot of poor decisions in what was being made in that time, and there was just less content being made in that time. So the content quality is improving. You see that with some of their upcoming theatrical releases. They have the top 2 grossing movies at the theater. Expect a couple of other big movies with Moana 2 and then Mufasa the Lion King later this year. And then you can see there's a huge lineup for 2025. Fantastic Four, Zootopia 2, Avatar is always a huge movie. And then for Disney Plus and Hulu, those theatrical releases then drive subscribers to not only watch their older content, but also watch the new content as it comes out. Deadpool and Wolverine came out. I watched that last night. You can see there's a whole slew of new content, and this isn't everything. This is just some of the select notable content that's coming out. So those core services, Disney Plus, which is kind of their branded content, Marvel, Star Wars, obviously Disney movies, and then Hulu, which is more of your adult content. Both of those, I think, have much better content momentum than they used to, and you're starting to see those subscriber numbers grow. But it's really when ESPN goes over the top that I think this business is going to be taken to the next level. ESPN Plus is a fine business. You can see here that the total number of subscribers between ESPN Plus, Hulu, and Disney Plus is now over 200 million. So that's a phenomenal number. A lot of those people are bundling in one form or another. But the real growth for ESPN Plus over the top, the price increases, we could see a $30 price point or so. That's going to come in fall 2025 when that product is launched, and it's going to be bundled with Disney Plus, Hulu, and then for sure ESPN, maybe even other services. That's when I think you're going to see this be a must-have for a lot of sports fans. And the reason for that is Disney has the best sports content of any streaming company. They have the SEC, they have NFL with Monday Night Football. They have the best package of the NBA content. They have been buying the best content rights through ESPN for decades. And that drives subscribers and value to cable. Now the same is going to be true for streaming. But that value is going to be extracted completely by Disney. That's where I think you're going to see a real inflection. Maybe those Disney Plus subscribers go from 112 million to 200 million over the next 3 or 4 years because they're bundling with a product like ESPN. I think that's where you see real upside. The other piece of the business is parks and experiences. Not a ton of growth here. You can see just slight growth in revenue. International, this is where their Paris park was impacted by the Olympics, so revenue was down a little bit there, and then still solidly profitable. Not really big changes in operating income. Not too surprising given a little bit of pullback by consumers, but management did say they expect consumer spending to be a little bit stronger going forward. We also have a ton of new openings for parks and experiences. And this is where Disney said that they're going to spend, I think it's $60 billion over the next 10 years to increase their parks, build new ships, all kinds of different things that they're going to be building. But they have additions to Disneyland, Walt Disney World in Florida. You have a new cruise line. In early 2025, you get a new nighttime spectacular in Paris. Late 2025, you get 2 more cruise lines and a whole bunch of other stuff coming to Disney World in particular in 2025. That will be added to over the next few years as they build out more capacity in the parks. Said that there's going to be both an addition of more capacity and then also ability to increase price. So I look at parks as a foundation for Disney, and then the growth really that I want to see is in streaming. That's going to be with Disney Plus and Hulu, but ESPN is really the kicker here. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. The other thing I mentioned was the closing of the deal with Reliance Industries Limited. That's going to combine the Star branded or Disney Plus Hotstar in India with assets from Reliance Industries. This is from TechCrunch. Reliance Industries is going to put $1.4 billion into the deal, is going to control the joint venture. Disney is going to hold a little less than 30% of the venture. But this is the biggest player in India right now, 85% of India's streaming market. So Hotstar has been a real challenge for Disney trying to get into streaming. This at least gives them a little bit of value and a little bit of way out. So potential that owning about 27% of this joint venture is going to be better than trying to go on its own. But we'll see how that one plays out. So I think things are moving in the right direction for Disney. The fact that management is confident enough to give guidance of high single-digit earnings per share growth this fiscal year, that is not going to include at least very much impact from ESPN going over the top, and then say that there's going to be double-digit growth in 2027, in 2026 and 2027. I think that's really good news because management is telling us that they have a handle on the business. They kind of know the trajectory of where things are going. And under the hood, they're showing a lot of confidence in this ESPN product going over the top. And I think this is going to come at the right time. It's maybe later than a lot of people expected or hoped, but Disney has been able to do a lot of learning from other companies. They hired somebody from YouTube. YouTube, I think, is really the leader, especially YouTube TV, with sports content right now. So can they bring some of those features, things like multi-view? They're going to have information for ESPN Bet. They're going to have information for online sports betting. I don't know that that's necessarily a great value add for Disney, but it is a revenue source for them. And there's just going to be a slew of content. Instead of having one show that's available on ESPN where you have limited content, it's limited by 24 hours in the day, you have basically an unlimited shelf space to be able to put content if you're Disney and ESPN going over the top. I think that's going to be a huge value add because maybe you're a college football fan, but maybe you want to watch pool or bowling. That was actually where ESPN got its start, was with those niche products, and then it grew from there to more mainstream products. We're going to now see a little bit more of that niche content, and they've got the big time content. They've got the draws, the NFL, college football. Those are the two biggest things, and then the NBA as well. Those are, I think, the three combination that's going to give you them the most value. That's going to get to, I think they could get well in excess of 50 million, maybe even up to 100 million subscribers. And if that price point is $30 a month, that could be a huge win for Disney in streaming. It'll take a while to get there, but I think the line of sight to that profitability is better today than it was a year ago. Let me know what you think about Disney's results. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.